Hello Trading has closed on December 17th. Today is the 18th. Let's go over our disclaimer first. This is my trading plan for Monday. Remember, I can be completely wrong. All trades should be at your own risk. And while we will discuss the long-term call, just remember that my long-term stuff isn't as accurate as my intraday stuff. I was busy all last week. Only call we had was for the pattern with the early low, which is this, and Monday should also have the early low. We had a target from the 15th, 46.2695. That's this red line. Red line printed, support under the target. We've challenged it a few times. The support could break, but there's nothing requiring it to break. We have the FOMC whipsaw. We went under 46.30. That's the first move. It tends to tell you what the ultimate move of the market's going to be. We then rallied 101 points and then dropped under this line. Now, typically, you just keep on dropping more than that 101 points, and you don't trade significantly over this price. We did trade significantly over the price. I suspect that it's because of seasonal factors, but it's also possible the idea isn't going to work. The seasonal factors at play that we're entering the most bullish period of the year. People who have gains don't want to take them because they'll have to pay tax this year. If they wait until January, they don't have to pay the tax for a year. And people who have to contribute to their pension plans have only 2 weeks left to do it. So the people who want to sell dry up, and the people who want to buy increase. It should lead to higher prices, and if that doesn't happen during this next 2 weeks, it's further evidence that we've topped out. So in 2 weeks, we'll have another indicator. But because we traded so high, we can't have the same level of confidence that we're going to drop as much as I said. But the first move after the FOMC announcement was down, and that has an excellent track record of telling us the next significant move in the market is going to be down. During the day, MEJT gave an ultimate buy signal right at the low. That worked. We got another signal to go long in the afternoon. The minimum target printed immediately, but we got more than the minimum. I think this is the most important chart I'm going to show. This might not be the only count, but it certainly is the prettiest one I've seen. It shows that this 12.5-year bull's over and gives us a target in the 2900s before we're through. Now, other counts might not break any rules, but the thing about Elliott wave is the count not only has to be right, it should be pretty. And when you get a pattern that lasts this long and is this pretty with perfect fibs, I just assume it's the right count until I'm proven wrong. Let's look at this last leg up. That's just as pretty. Everything hits right on the nose. And now let's focus in on recent action. We have wave blue A down. This could be blue B, but it could be A of B. Frankly, this isn't the time I look for a major collapse in the market. It's one of the most positive times of the year, so this might not be the end of B. I'd frankly be happier if we piddled around the next couple of weeks and then had the wave blue C in January. But I don't always get everything I want, and if we do start dropping now, nothing to stop this from being wave blue C. Well, Monday's pattern has the early low. We could still gap up. These are my calls for the patterns for next week. Christmas Eve, we close early. Friday, we had a gap down, hit a lower low, and closed over all the intraday lows. It's a positive pattern. Unless we promptly undercut that low Monday, we should see higher prices even if we don't close higher. Now, I can't rule out gapping under Friday's low. When you drop all day Friday, it usually follows through. But if you gap up instead, that's a positive pattern, confirming the positive pattern we had Friday, and should lead to higher prices. We're entering what is one of the year's most bullish periods. It's not the time one looks for a collapse to begin. It's entirely possible we hold our ground till the next year starts, but nothing requires it. That being said, the wave count continues to argue for a major top, gives a reasonable target in the low to mid 2900s before the decline ends. And unless and until that count's invalidated, I'm going with it as my long-term call. So we have the early low Monday. If this holds, good chance we see higher prices even if we don't close higher. We're entering a very favorable period for stocks for the reasons we've discussed. But in the long run, as long as recent highs hold, we're looking for a very sizable drop, even if we have to wait for next year to get most of it. And that's today's call.